Okay, in this video we're going to learn how to trade non-farm payrolls, and this video is from Forex Early Warning, forexearlywarning.com. This article is over on our blog. If you click on our blog, you'll find this article over in the recent articles area. So how to trade non-farm payrolls. Okay, non-farm payrolls news driver occurs on, generally speaking, the first Friday of the month. And what you're trying to do, what we're going to try to show you how to do, is to take advantage of the volatility without taking any type of a very low risk or almost no risk. Remember that non-farm payrolls news driver occurs once a month, and it tells you the number of paid workers in the United States, outside of government and farm employees. So if the number is high, generally speaking, the USD can rise or fall. But I'm going to tell you right now that the non-farm payrolls news driver can affect all 28 pairs we trade. You can get buy and sell signals for all 28 pairs after non-farm payrolls, not just the US dollar pairs. So the best time to trade around non-farm payrolls is you have to wait for the NFP news driver to come out, and that's it. It'd be like at 7:30 Central, 8:30 Eastern time on the Friday, the first Friday of the month. And wait a few minutes till after the initial spikes and the initial movements, and then we'll show you what to do next. Like any other trade, you want to have a set of rules for entering the trade. If you click right here on this link, it'll take you to another article that we have on the blog called Rules-Based Forex Trading. You can actually come up with a set of rules for trading non-farm payrolls. It's basically the same for any trade. Trading after non-farm payrolls is the same as any other trade. You have to have the right criteria, and then you can certainly enter. So let's look here. Once again, just to remind you, it's really a complete myth that you only trading the USD pairs is possible after non-farm payrolls. You can actually trade any one of 28 pairs after non-farm payrolls as long as you have the right signals. Now the example we're getting to show you is on a US dollar pair, but once again you can trade 28 pairs using this method after non-farm payrolls. So here's an example trade. This trade occurred on June 3rd of this year, 2016, and here's how everything happened. The first thing you had was you had the non-farm payrolls news driver. That's right when the news occurred at 7:30 Central, 8:30 Eastern, and this is the US dollar against the yen. This is the US dollar yen, and what you have here is so you had the initial movement on non-farm payrolls. Now the initial move here was pretty strong, okay? The initial spike was strong. What you really would like to see is a pretty small spike, and then the continuation starts. So after non-farm payrolls, and you would wait, 10 to 15 minutes right after the announcement, and then you start looking at our signaling system called the Forex Heatmap. Well, in this particular case, the US dollar was weak, and you got a buy signal on the Euro USD and a sell signal on the USD yen. So you go over to the USD chart, and after the initial spike, the pair is going to set up some short-term support. The Euro USD will set up some short-term resistance. As soon as it breaks through that short-term level, 107.75 there, you can see your pricing over here. As soon as it breaks through, that's your entry point, and you're fully confirmed with the US dollar weakness. So as soon as it enter the trade here, let's say around 107.75, well, the pair dropped another 75 pips, and also over the next couple of days this pair continued dropping. So this is just an entry point into a larger trend and time frame. So what you're using here is you're using the Forex Heatmap, which you can link to there, and some very simple exponential moving averages set up on this is a MetaTrader charting system. This is the Forex Heatmap here. you're using some pretty simple indicators. You're waiting till after non-farm payrolls and checking to make sure that the signals are consistent on at least one currency. So the Euro USD also rose on the USD weakness, and it broke into the D1 time frame trend, so that was also a good trade. We could have showed you a chart on that one too. Pretty strong move there on the Euro USD. And so your conclusion is this: it's possible to trade after non-farm payroll news, not just the USD pairs, but any one of 28 pairs. And this technique that we're showing you for trading non-farm payrolls, you can use after any news driver on any of the 8 currencies we track. You can use this same method after New Zealand dollar news, Japanese yen news, anything that hits the market. Just check to make sure your signals are good and consistent, and trade the continuation of the trend based on the Forex Heatmap and the smaller time frames. Hopefully you're trading in the direction of the larger trends. So this same technique will work after any volatile news driver on the world economic calendar for any of the 8 currencies that we trade. So don't be scared about trading non-farm payrolls. Just make sure you have the right system and the right signals, and you can trade non-farm payrolls successfully.